This is Stock Talk, a discussion of stocks in the news with the analysts of Zacks.com. Well, with concern over credit card debt being front page news, we thought it would be interesting to look at one of the large credit card companies. Mastercard, MA is their ticker symbol. This company's well-being is tied closely to consumer spending at a time of huge economic challenges, as well as to the fate of its business partners, the banks. Here to help analyze this company with us is Tracy Reinick, who's our value stock analyst for Zacks.com. And next to her, the inimitable, and I don't even know what that word means, which is scary, Michael Vodicka, who analyzes momentum stocks for us at Zacks.com. But I said it anyway, okay? It's just one of those days. So, while both MasterCard and Visa, to mention one of their competitors, seem to be sheltered from deteriorating trends in consumer credit because they don't lend, right. Okay? Still, a lot of people out on the street are expecting the transaction volume to decline significantly in the coming quarters because of the cutback in consumer spending. Right. And if fundamentals are any indication, a little bit of slippage in their recent earnings report just the other day might be bearing that out.
Well, the last quarter that they just reported was pretty good for them. They actually beat estimates by 22 cents, I think it was, 25 cents.
They lost $1.49 a share.
Well, they did, but that was a special charge for litigation that was related to the Discover and Visa antitrust suit that Discover brought.
Sure, if you back that out,
yes.
They actually made money.
Yeah.
But it's like saying, if I don't count lunch, I weigh 149 pounds.
I know, but for the purposes of the estimates, they actually are reporting the gain.
Okay.
So, but, and they're not going to have that loss every quarter. They came to the settlement now, so you might see it for a little while longer, and then that should go away.
All right.
So they did do pretty well in the quarter, actually. They saw revenues up over 25%, or it was 23% year over year, and their revenues are up about 25% for the first 9 months of the year. So all the numbers look good for them right now.
Okay, but again, they make money by processing transactions.
They do, and they did say, they reaffirmed 2008 guidance, but they did say that they're predicting slower growth in 2009. They had 12 to 15% earnings growth in 2009, and they're now saying that it's going to be below that.
I mean, their main competitor, Visa, has already admitted just earlier this week, as a matter of fact, that credit card use has finally started to decline here.
Right. Right. These numbers are for, the prior quarter when
Right.
we haven't seen the big slowdown. Mastercard did say they started to see transaction slowdown actually after Lehman Brothers went under in mid-September. So those numbers are going to come out in the next quarter. And they are acknowledging that they're seeing it drop. But how bad is it going to be? Because the thing is, if you don't have cash, you're still going to use your credit card, your plastic, to buy whatever you need. So it's going to depend on, will that override people pulling back?
There's another interesting underlying statistic here, because while credit card transactions may be declining, debit payment volume is growing.
Right.
So are more people using debit cards?
Yes. Oh, yeah. That's a big growth area for them. I mean, they're trying to get rid of any kind of cash or checks. They're trying to become the cash and checks, and that's been their strategy. And yeah, you are seeing a big uptick in the debit side.
So as a company, fundamentally, they're still sound.
Yes.
They're not. Do you think that they're going to be hit particularly hard by this credit crisis as we go further down that road?
I don't know. It's hard to say because, like I said, you have this two-pronged issue, whether or not more people will be using the plastic because they, for the credit card side, because they don't have the cash,
right?
Or how bad they will pull back on buying anything,
right? Just
because of what's happening in the economy.
So yeah, they agreed to pay Discover Card about $2.75 billion to settle an antitrust suit that was filed by Discover Card back in 2004.
Right.
That's where that one-time charge came from.
Yes, and that was in conjunction with Visa, actually.
Right.
Yes.
And so if you back that charge out, they actually earned $2.47 a share.
Right.
In the July to September period.
Right.
So not too shabby. Revenue increased 24% for the company, they said, fueled by a jump in gross dollar volume and transactions.
Right.
And among the credit card companies, Michael, they are looked upon as being a forward marketer and a pretty decent technology company. So the momentum on this company should still be decent, I would think.
Yeah, Mastercard was definitely one of the high flyers on the street for quite some time, ever since their IPO, and their share price topped off at $320 because of that incredible enthusiasm. And really, at those levels, that's an overvalued stock because it really wasn't a reflection of the fundamentals, the underlying earnings power of the company. And in light of the overall market weakness that we've seen over the last 3 to 6 months, a lot of that heat has come off the stock price and is actually traded as low as $120 per share in early October. So that's $200 off its high. And at those levels, this is a really attractive stock. The valuations look very attractive. The estimates have held steady here so far for the current year. Analysts are looking for earnings of $8.80. And when you have a share price of $120, $130, $140, you're looking at a forward PE multiple of 10, 12, 15 times. So that's more reasonable. So on that level, I'd say the short-term momentum is with Mastercard. Now, they do face some headwinds, which you've talked about. They've forecasted a little bit softer 2009. They're going to trend below their projected 12 to 15% annual growth. But on a more macro level, I see Mastercard as being less vulnerable to a lot of the economic calamities that other companies are being exposed to. So I think it's an attractive company, an attractive stock.
Well, they've gained a reputation over the years as being a real smart competitor, again, with new technology that they're not afraid to bring out. Some memorable advertising.
Yes.
As a matter of fact,
Yes.
I read somebody refer to them as an IT company with great TV commercials.
Yeah.
Is sometimes how they're viewed.
Yes.
And they have a global reach.
They do.
And so those three factors are really going to be what I think supports this company here going forward.
Yeah, they have business in over 200 countries worldwide. So, someone's slowing somewhere, they might not be in other areas, and the emerging markets are going to be big for them.
Okay. One to watch as this credit crisis continues. Mastercard, MA, the ticker symbol. With Tracy and Mike, I'm Terry Ruffalo.